we're going to be like $1 million around 2033 and $10 million in 2045. Remember, not your keys, not your coins first and foremost, but these treasury companies can access cheaper capital than, let's say, you and I can as individuals. That's the arbitrage, right? Like, I see it like this is a fiat regulatory arbitrage that exists between now and hyperbitcoinization. 2020 happened and it just made it like, what exactly is the point of paying this extra money in taxes and all this other stuff? Like, what is that for? We're better off just sort of advancing this idea of like flag theory and sort of treating states like service providers. Fiat inflation is probably 10, 12% a year, right? That's how much people are actually getting wrecked if they don't buy Bitcoin.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Stephan Livera is a Bitcoin podcaster and advisor to Bold Bitcoin. He's also an expert on Austrian economics. Stephan Livera, welcome back to the Bitcoin Matrix podcast. How are you?
Hey, thanks for having me back. Doing well.
Yeah, man. I'm excited to chat. You know, we were actually talking about it a minute ago, but I saw you speak in, I think it was Austin, might have been Dallas, in BitBlock Boom 2021. You know, I found it really inspiring. I'd like to kind of pick up there. That was about escaping Australia. What was escaping the prison island of Australia like? How'd you do it?
Well, yeah, I mean, rewinding the clock, that's basically 4 years ago. I think it was in Dallas that year, BitBlock Boom. And I mean, look, I was very frustrated with the way the Australian government and the Australian people were treating all the hysteria and all the lockdowns. And yeah, basically at that point I had decided to leave. And so, yeah, I just think it was just sort of a matter of trying to do now I'm still an Australian citizen, but it was a matter of trying to cut ties from a tax perspective. Now, unfortunately, I know you guys in America can't do that so easily, but for most of the countries, it is possible to basically cut ties from a tax perspective and, you know, set up somewhere else. And so, yeah, for me, the main reason for that was just, yeah, like I just didn't like the treatment around all the lockdowns and, you know, the mandates and the travel bans and all of this. And so I was very frustrated by that, and I thought, this is just a massive breach of the trust or the so-called social contract, even if I don't necessarily agree with the social contract to begin with. It just, you know, up until that point, up until 2020, I had seen it like, oh, okay, yeah, taxes here aren't that low, but at least we're free. At least we have it better. And then 2020 happened, and it just made it like, well, okay, what exactly is the point of, you know, paying this extra money in taxes and all this other stuff? Like, what is that for? And so, yeah, so I think that was really what, you know, that was what drove that decision. You know, I'm happy outside. And so there's no one size fits all. There's no one place that everybody has to go. You have to think about, okay, what's right for me? Can I earn money overseas, or can I invest overseas, or are there opportunities that you can get by being overseas? And so that is basically why. Nowadays, I'm living in Dubai in the UAE, and yeah, we have a great lifestyle here. So I think, it's not for everybody, but, you know, you have to find what works for you.
How much do you think being a Bitcoiner, not so much the monetary value, but sort of the principles and your learning and understanding play into your decision to leave Australia?
So I think it's a few things. This plays into, in a related school of thought, is Libertarianism, obviously, and Libertarians, not all, are interested in this idea of quote-unquote flag theory. And it's this idea that the place that you are a citizen of is not necessarily the place that you live, is not necessarily the place that you do banking, is not necessarily the place, you know, you can sort of look at the different options around the world and not be beholden to just kind of having everything in the one jurisdiction. And I think this is a good trend overall, because it means that as more people do this, we eventually start treating nation states more like a service provider rather than your owner or your ruler. Now, it's an imperfect thing. It's not, you know, perfect. But I'll give you a quick analogy or a quick fun fact. At the time of World War II ending, 1945, depending on how you count, there were probably 60 to 70, maybe 80 countries in the world, or nation states. And in one human lifespan later, like 80 years later, in 2025, that number is more like 193, 194 nation states. So that trend is an interesting one, because if you think about, if most people just kind of think about, where they live and what they're doing, they probably just think, oh, the country I was born into, that's just going to be that way forever, right? Or that somehow these borders, the way the lines have been drawn, are sacrosanct, that they will not change. But actually, yeah, there has been a lot of that movement over this time, because nations, maybe they break down and they form into, smaller subgroups, and maybe there are secession movements, and, sometimes nations break away, right? Like Czechoslovakia is now Czechia and Slovakia, or, the breakdown of USSR, the breakdown, there are so many different examples of this, or even countries that want their independence from another country. So these examples create new sets of borders, and they have new sets of rules, and you as an individual or as a family can take advantage of that by using that as an example. So that means there can be different rules that apply and different taxes that apply, and sometimes that can be to your benefit. Sometimes it's not, sometimes it is. And then there are benefits that you can get out of that, whether that's a tax perspective, or maybe it's kind of the lifestyle, or maybe the culture, or maybe it's safety, right? That's another thing. Like, people are now starting to notice that in some parts of the Western developed world, it's actually not that safe. It's not actually that good anymore. And that's why we're starting to see migration. And so there's a stat that's going around. I think Henley and Partners did some research, and they found that a lot of millionaires are leaving the UK, as an example, because now there's kind of things driving these decisions. But I think in the UK, it's things like taking away non-dom tax status, and various overtures and movements being made, things like tax the rich or eat the rich, and wealth taxes and unrealized gains taxes and all these things. And we've seen similar, in recent decades. I think France made some moves about wealth tax, and then wealthy people left. I think Norway has seen some of their wealthy people leave and go to places like Switzerland or Italy. So it's not like an easy, clean, like everyone goes here and that's the promised land, this is the Bitcoin citadel to go move to, but it's more like you find what works for you. And let's say you're in North America, well then maybe there are places in South America that might be good for you because of the time zones and the travel is easier for you. And, maybe if you're in Asia, maybe there are other parts of Asia that make sense for you. Or if you're in Europe, there are certain jurisdictions that make sense. Another example I'll make is if you look at F1 drivers, a lot of them live in Monaco. Why is that? Because tax savings. And so, but even there, your situation matters, right? So, for example, if you are a French citizen, you cannot make use of the low tax in Monaco. So the French F1 drivers, maybe they don't care as much about living in Monaco, right? So I think as you start, depending on your income, depending on your net worth, depending on your mindset, depending on how flexible you can be, that will change how you think about, where should I live? Where should I go? And you start thinking about options that you might not have previously considered. So I think that's where this whole flag theory idea came from, but it is a continually evolving and shifting game. And I think that's the other difficult part, because sometimes certain programs in terms of citizenship or residence may be open and other times they're not. So it's no one size fits all. It's sort of something that you have to really think through and understand what are the different options, and understand, does it make sense for you or does it not?
I was inspired by your speech. Months later, I ended up picking up and voting with my feet and moving our family across the country. Things were changing in the United States around that time as well. Hearing people like you and hearing these ideas, it helps you kind of come to your own maybe knowledge and conviction. Do you have you been back to Australia since you left?
Only one time for about 4 days, and sadly that was for a funeral for a family member, unfortunately. But other than that, no, I've not been back. I think, look, everyone's got different reasons for it. I think for me, it's just an aversion to kind of that feeling of going back. Like, even in those, when I went back for a funeral for the 4 days or whatever, I just felt really, maybe it's like an emotional, psychological thing as well, but I didn't enjoy the feeling. Like, I just felt Now, okay, obviously I was there for a funeral and it was a family member. So obviously I was, sad because of that too. But I just, even setting that aside, I just felt, I just didn't like the way the country is going. And, it makes me sad. I certainly, out of my national identities, I see myself more as an Australian than anything else. But yeah, just really disappointed with where things are going. And so, yeah, look, I've, spent... Basically, I live full-time in Dubai, but I fly around a lot, obviously, for Bitcoin and some libertarian conferences and events and things like this. And yeah, that's been it.
Yeah. I mean, I've been fortunate to visit Australia. I got to spend a month there. It's a big, beautiful country, not very populated. It's a shame, that you can't do more with the space there. I'm sure you miss it. It's beautiful. Moving across the United States is very different in the sense that, Australia is this huge island. It's very isolated. When you leave, it's hard to return, even just logistically. So such strong implications. You asked a couple of good questions during your talk in Dallas. What do you do when the people you live around don't believe in your freedom? And how do we have freedom in an on-free world? So do you find the world to be very free right now and you're floating through it and you're a global citizen? Or do you think the world is on free and you're trying to find your, nice spot?
So yeah, it's a hard one. I think ultimately for many of us who have a more libertarian way of seeing the world, and especially if you kind of believe in the idea of anarcho-capitalism, but for me, I think that's kind of the theoretical idea. I just don't know if it ever happens in my lifetime, So it's kind of like the way I see it is more like, in practice, find what works for your family, right? Because, you get this life one time, and if you believe that you can find a better jurisdiction that works for you, then yeah, go and look at it. And maybe the tax savings that you make from that, or the other freedom gains that you get from that, or maybe you want to go somewhere that because you think that's the happening place for your industry, whatever you're working in, then maybe you should make the most of that. And maybe it's more like understanding, okay, I think by doing this, I could earn extra money, or by having low taxes that I could, earn more money and pass down that money to my children when I die, or even, give them a better lifestyle or give them different options in terms of, as an example, like because we live in Dubai, it's a super hub. It's one of those globally, there's a lot of flights in and out of Dubai, direct flights. And so that makes it easy to travel. So that's one example. So maybe that's a flexibility that, some people would like. For other people, maybe it's like, okay, it's a lot of the people who are important in your industry, maybe they come through that industry, right? Or they come through that town, that city. And so Dubai just is a bit of a global city, right? So people are often coming through, even if they don't live there, or maybe they live there part-time. That's interesting too. So yeah, I think it's just, it can offer different opportunities, and that can be from a tax and a financial point of view. It can be from a lifestyle. It can be from maybe this is the way you would like your children to be raised, or you would like them to be raised in this particular way, as opposed to, where you were born. So, there's just lots of different opportunities there. But like I said, there's no one size fits all. You really have to find what works. And sometimes it requires a bit of experimenting and trying different places before you sort of find, okay, this is really the good spot to go.
Yeah. What is it about Dubai? What is the vibe like there? Do you think you'll be there long term?
Yeah, I mean, I think it's safe, it's low tax, there's great quality services, very convenient. So things like, there's a lot of apps and things that are available, whether it's, I don't know, getting your dry cleaning done, there's an app for that, and there's, these aspects of it. Yeah, just the quality of life, I think. That's why you'll find there are people who come here. And then there are other people who come here because they think it's, it's economic opportunity, right? They can earn more here than they would otherwise in their home country. I think those are some of the factors that really draw people in. And the UAE and Dubai, I think it's very close to a large portion of the world, right? Like if you think about India and China and Asia, like from here, it's like 6 or 7 hours to Europe and maybe another 7 or 8 hours to Asia. So that's quite convenient too. Yeah, for that reason, yeah, it's really good to be here for those reasons also. So in terms of how long we're going to be here, it's hard to say. Medium to long term, yeah. I think it's just, it makes sense for us to be here. But we also know that here in the UAE, it's not that you get citizenship for living here, right? Like it's not a normal thing that you would naturalize and become a citizen unless you're like, Pavel Durov or Kevin O'Leary or some, special case like that. Generally speaking, it's kind of like you come here and you can get residence rights by, basically paying for that. But citizenship is sort of, that's just not how it's done here. Whereas in other parts of the world, that is kind of a normal thing, that once you've lived there for a while, you can naturalize and become a citizen of that place. So again, it really depends where you go, what you do, and like what you're trying to optimize for.
Sure. Well, speaking of optimization, I'd love to hear your thoughts on some current Bitcoin topics. As a longtime Bitcoin podcaster, you've been around a lot longer than I have. Your show's an inspiration to mine. What do you make of this Bitcoin core versus knots and filters and things of this nature?
Yeah, so I've publicly sort of gone back and forth on various things around this, but the high level of it, my main disagreements are I don't like this Ordinals stuff, or I've been calling them retardinals for a while. I don't like that stuff, but I also don't see a way to realistically stop it using relay filters. So that's, so I would say probably two main disagreements. One is, I think it's more like a nuisance issue. It's not like this is going to kill Bitcoin sort of thing. Whereas maybe if you listen to the rhetoric at different times, they've sort of said, oh, this is like, you got to stop these guys because they're going to like stop Bitcoin being used as money. Whereas I see it more like, it's more just like these people are just a nuisance, like the spammers. I see them as a nuisance, but they're not fundamentally stopping us from using Bitcoin as money. So, I just don't see it as like a very serious thing that we all need to get angry about. And then the other thing, probably the other big main disagreement I have, is that I don't believe relay filters are the right approach. And so I guess just to kind of take it back a step a little bit there to explain, just for listeners who might not be as familiar, in Bitcoin, we have things that are consensus and we have things that are policy. So consensus means your node will accept or reject that if it's in or out of consensus, right? So that's one thing. Policy, it just means your personal node may not relay those transactions, as an example, when we're talking about relay policy, but that's different. There are things that are not valid from policy perspective, but are valid from a consensus perspective. So some of this argument, some of these debates are saying, like the knots guys basically are saying, we want to sort of, if I had to try and steelman them, maybe I won't say it perfectly, maybe people will be angry at me in the comments or whatever, but if I had to try to steelman them, they would say, look, you guys are Bitcoin Core, you're bending over for the spammers and shitcoiners. We want to send a message to them and to the miners by running knots to use relay filtering as a way of not relaying the spam, what they view as spam. And now my view is more like, yeah, I agree that a lot of that stuff is spam. I just don't think we have a good way to stop it. And I believe that attempting to do this with relay filters is going to create other negative outcomes that worsen mining centralization at the pool level. And there are points where I would even agree with some of those guys. Like, as an example, I think block template construction, it would be good if we can decentralize that further. And that's why I'm supportive of things like Datum and SV2, and I like Ocean. I'm supportive of that. I just don't agree on the relay filter component of it, that I don't believe relay filters are the right approach. I don't believe that driving, sort of worsening that problem of mining centralization is the way we should go. I think we should go the other way. Are there other points to be made around things like, okay, maybe it's like a cultural thing. Maybe people should socially shame spammers. Maybe so. But there's only so far we'll get with that. But I think, if anything, the social shaming aspect is probably better, is a better idea than attempting to relay filter the spam. And so, I mean, there's so many different like kind of rabbit holes and nuances around this. But the short version of it is, I believe that these filters will not stop an economically motivated spammer or attacker. And so I believe that and this is also a controversial point, right? Because the filter guys, the knots guys they might say, well, see, we would have been starting to send a message to these retardinal spammer people if we tried to filter inscriptions 2 years ago in 2023. And that should have been the approach. And so the way they might frame it is they might say, well, that's what we should have done 2 years ago. And they would say, well, you shouldn't have even you shouldn't raise the op return limit because now you're opening the door for even more spam. Whereas let's say the core, and I would say arguably most of the Bitcoin technical community doesn't see it that way. They see it more like, no, this op return thing is relatively nothing burger because it only makes sense really in this sort of range from 80 bytes to like 150 bytes or so, and it's not really going to make that much of a difference. Reason being, spammers can already, above a certain size, they can already get a 4x discount by using the inscription envelope. So it's kind of, again, a bit of a complicated thing, but I think at the end of the day, I don't believe the op return thing is going to create a lot more spam. And even if it did, I think it's not going to make it harder to run nodes because remember, if you had a block that was the theoretical maximum with 4 megs, that's still bigger because they're getting the witness discount than the theoretical maximum op return block, which is like about 1 megabyte. And so it's not making nodes harder to run, right? So I think we've sort of seen a lot of arguments back and forth, but I think people are maybe kind of misstating some of the different arguments and saying, well, see, you're making it harder for somebody 50 years from now because they've got to download all the cat dog JPEGs or whatever. I see it like in 2017, we, the community, quote unquote, we made a decision around SegWit activation that this was the maximum block size we would be okay with and that these were relatively conservative limits. So I'm not that worried. Like 4 million weight units or about 4 megs is in the theoretical maximum. In practice, it's not actually that much anyway, even with spam. Most of these blocks are more like 2 or a little bit over 2 megs. So the actual blockchain growth is not that much. I think these were already relatively conservative limits to begin with. So I think so there's a few different arguments in and out there, but the short version of it is, while I think cause comms and moderations on the GitHub repo and the comms around some of this stuff were poor, I think they are broadly correct in their technical approach. But hey, if you want to run knots, go ahead. Everyone should run whatever node they want. I just think that relay filters are not the right approach. And I don't think they are the best way to even stop the spam. I think block size and fees really are the more important ways that stop spam. And what we should just focus on generally is just to grow monetary adoption, right? I don't like the spam stuff. I don't like the shitcoins. But ultimately, if you really think it through and you understand how things like RGB or Taproot assets work, they can already create shitcoins on Bitcoin anyway today, right now. There's nothing we can do to stop that. So I think, to me, I view this like a lot of the NOTs supporters are, like, they're well-intentioned. But I think they are maybe, let me frame it this way, let me put it this way. I think they are believing what they want to be true and not what is true on the network, right? So they, many of them think, oh, look, if enough of us run NOTs, that somehow it's going to, like, quote unquote, send a message about what's acceptable and what's not. And I just don't really agree with that. Like, I think there's a bunch of these spammers and they will just use Mara Slipstream and other services like this, or they will partner and peer with these mining pools anyway, or they will use things like Libra Relay to create alternate relay networks, and we're not really going to be very effective trying to stop them using relay filters. So, yeah. So I guess reiterating my main two things are, one, it's a nuisance issue. It's not like a showstopper here. It's just annoying, but whatever. And secondarily, I don't think relay filters are the right approach. I don't think they will really help us. And even if they do kind of work, they also risk further worsening mining centralization, which arguably is already bad, right? So like I said, I agree. I like Ocean. I'm just not necessarily sold on running knots. So that's how I see it. So I'm somewhere in between, maybe a little, like, I think core people have it correct, but everyone should run whatever they want. I'm not one of those people saying don't run knots. I'm just saying you run what you like.
Yeah, well, I really appreciate the nuance there. I thought that was really illuminating on this point. It's kind of complex and confusing for a lot of people, so I do think that was great. So then I think I see what you're saying there. What do you then think about the process and the way the discourse went? Like, let's say you felt or this issue was, in an objective sense, way more important or sort of dicey. What did you make of the discourse and communication, and where do you see that going forward?
Okay. So, as I said, I think the moderation on the GitHub, as an example, was bad. Like, I think they should not have... Like, there was a particularly egregious moment where they kind of locked the thread to most people, then they kind of quickly unlocked it to let one more person put an act through, and then like relocked it. It was just kind of I think that was a bit off. And obviously the comms around it was poor. But in fairness, it's a decentralized ecosystem, so it's hard to kind of coordinate because there's nobody who can kind of come out and say, I speak on behalf of Bitcoin Core, because Bitcoin Core is itself not a monolith. Many of them disagree with each other, these developers. And so... Yeah. Now it did also kind of spawn or let's say exacerbate or drive forward a lot more conversation about alternate implementations of Bitcoin. But even there are people who argue about that not being feasible or possible, right? So depending who you talk to, right? There'll be some developers who say, yeah, it would be a good thing to have multiple, from the ground up implementations that are really used a lot on the network. And yes, there are a few. So there's Bitcoin Core, there's BTCD, there's Libitcoin, there's Knots, which is mostly core with some extra options. There's maybe a few other implementations out there, but the other challenge with this is that you have to make sure they are staying in consensus together. And for example, BTCD, which was used by a lot of the LND nodes, they have had some bugs in there. And so then it's like there were times where it screwed up and they had to quickly kind of rush to kind of get it patched and fix up to make it stay in consensus with the rest of the Bitcoin network. And so I think it's, or to be fair, actually, I might have slightly misstated that. It might be more like there were certain things about the way it watched the chain that didn't make sense for Lightning. It's kind of a complicated thing to talk about. But the broader point, though, is that there are some of the, let's say, Bitcoin graybeards, some of these like long-standing, technical, highly respected people in Bitcoin. Some of them don't necessarily believe it's possible to do this, or maybe it's like they see it as like it's a massive effort, it's a massive lift. Whereas others might say, no, actually, yeah, we should pursue this project. So I don't claim to have deep technical knowledge about that. It sounds like it would be a good idea. I don't know if it's possible. Maybe it is. I don't know. And I know there are some efforts, like I think LibBitcoin kernel, which is like this effort to try to take some of the consensus aspects and have them separate from just Bitcoin Core, so that other people can play around with different implementations, and it would be easier to make that. But I don't really. Yeah, these are long-term projects, and it's not easy because it's things like technical feasibility, it's funding, it's developer work, developer attention and time. I don't really know. Yeah.
Well, it's just interesting to note because, I mean, it's over a $2 trillion asset now. You have Bitcoin ETFs, Wall Street retail exposure, and then this sort of conversation about Bitcoin Core and filters. And, I could see that being really confounding for sort of maybe people who consider themselves outsiders. What do you think of core funding? Like, does it concern you that Bitcoin Core developers are on payroll of corporations, and maybe several of them are on one corporation's payroll?
I think that's at least gotten better over time because now there are different organizations. We have to think through what it means. Like if we said you as a Bitcoin developer should not receive funding from any corporation, then are we effectively saying you need to be independently rich to do this, or everyone should just do it in their part-time? And is that feasible? Like, do there need to be people who are working full-time on some of these quote-unquote unsexy tasks, things like review and maintenance that are needed, that are essential, or things like packaging it up across different types of computers, right? So Mac, Windows, Linux, and just making sure that it works and it's compatible across all these things. There are efforts that are required to make that happen. And so there are different organizations who do that funding. So we have organizations like Chain Code Labs, Brink, HRF, there's Vintium in Brazil. I think Blockstream has funded, people who are doing some of that work. Spiral, obviously, can't forget Spiral. did I mention OpenSats? They're another one. So yeah, I mean, these are some of them, but it's probably going to develop that there'll be more of them, and there'll be more different developer funding organizations. And some of that is not necessarily for, like, a lot of that is not necessarily for like feature upgrades, but for just maintaining and just making sure that everything still works. Although, yes, of course, there will be some of that goes into things like research and actually trying to figure out new upgrades and things like this. There's another one called localhost, I think. Localhost research, I think. So yeah, so there's a few of these organizations out there, but I think ultimately it just comes down to, are there enough people looking at the code of Bitcoin and at the applications and the hardware, and is there sufficient review? And I guess that's the question, right? And I think what we have seen historically is maybe funding questions. People, maybe it wasn't that easy to get funding, but now it's sort of like, well, especially now, I mean, we're at all-time highs, and so, I think now maybe it's not as much of a like funding question, but maybe it's more like having the right pathways and having the right, I guess, talent streams, right? Like having like university students or whatever, or people who have the right skill and the right ability to actually go into this, because it takes time and effort to go and actually get on-ramped into being a developer who can really understand these nuances of what's happening in Bitcoin Core. Like I'm not a developer. I am a podcaster. I speak to a lot of people in the ecosystem, and I'm just trying to, I guess, aggregate what I'm hearing and put that into a digestible message.
Sure. Well, I'd love to change topics. I got to ask you about Bitcoin Treasury companies. And what is your impression? And I'll start there.
Sure. I think it is a new phenomenon. Now, of course, there are lots of arguments back and forth. Some people are arguing they're shitcoins. Some people are saying they're a Ponzi. Some people are saying, they're a pyramid scheme, or somehow they're going to contribute to, the next bear cycle. I mean, who knows? But I view it as it's a continuation of my friend Pierre Rochard's speculative attack thesis that he wrote in 2014, which is that people will borrow fiat cheaply and buy Bitcoin. And I think this is just sort of the next level of that, because it's a few things, right? But I think driven by Saylor and strategy, and kind of more recently, that has really started to ramp up, right? Over the last 6 months to 1 year, that's really ramped up a lot. So, strategy, obviously the 600-pound gorilla in the room with their, 600,000 coins it is now. And other people are kind of really quickly trying to catch them. Although I don't know if anyone will at this point. But I mean, I guess to your question, like some of the debates in the ecosystem are like, should you be for them? Should you be against them? Should you just tolerate them? I see it like you've got to remember, not your keys, not your coins first and foremost, right? That's important. But I don't see an issue personally with people engaging in these treasury companies. Now, disclosure, I am involved in one that's coming up. It's not out yet. I'm an advisor and an investor, but that's not out yet. It'll be out in maybe a few weeks or a month or so. We'll see. But the reason is I believe it's helping, it's sort of accessing these markets that were not normally accessible. So if you look at like the Jesse Myers, that Croesus BTC, if you look at that kind of big chart that he has of, there's $1,000 trillion worth of financial assets in the world. Bitcoin right now is 2.1 or 2.2 trillion, whatever. It's tiny. It's just tiny. It's not even, 1%. And by structuring your company in a certain way, can you tap, these multi-$100 trillion equity and debt markets? I think it's a huge opportunity, and I think it's going to be part of how a lot of these people, new people, will start learning about Bitcoin. They'll start getting Bitcoin exposure. Yes, it's custodial, it's derivative exposure. It's not, held on your cold card, but this is how I think a lot of people will start, and maybe they'll buy a share of some treasury company, and because there's all this excitement about them, and they're so highly performing. And fundamentally, these treasury companies can access cheaper capital than, let's say, you and I can as individuals. That's the arbitrage, right? Like I see it like this is a fiat regulatory arbitrage that exists between now and hyper-Bitcoinization. And that may be 20 years out, it may be 30 years out, none of us knows. And so it's decades out from here till hyper-Bitcoinization, is my view. And there will be bull and bear cycles on the way there. And people should understand that treasury companies are not the same thing as Bitcoin, right? If you're buying these things, you are buying equity or debt of a treasury company, right? So it's important for people to understand. Obviously, I know you come from the accounting world, just as I did. So we understand the difference between, you know, what is Bitcoin versus what is equity, what is debt. But as long as you're clear about that, I don't see an issue with that. I think, yes, you should be aware there are additional risks that you are layering on. You are taking management risk. There's custodial risk. There's, you know, government seizure, capture risk. Like, of course, there are these risks. But also, we have to step back and think, how and why are they outperforming Bitcoin? At least, yes, I understand it's not the same thing as controlling your own keys. But how are some of these companies outperforming Bitcoin? Well, it's because they can access cheap capital. They can access either cheap debt or cheap equity and buy Bitcoin. And if they even, you know, if they can effectively borrow at 0% and buy Bitcoin growing at 40% per year or 30% per year or whatever, it's a no-brainer. And so the challenge is these public companies especially can do things that you and I as individuals can't do. And that's kind of the bottom line. Now, I understand some of the criticisms, some of the arguments are, well, are they being missold to people or mismarketed to people? Or they talk about BTC yield, but you can't withdraw that yield. But the way I would see it is like, you wouldn't say, oh, fiat stocks are a scam because you can't just instantly withdraw all their earnings. Well, no, that's the decision of the company. Are they going to pay out dividends or are they going to reinvest? Are they going to, you know, it's corporate governance, corporate finance. This is how businesses and finance work. Obviously, I understand you get these things, but just kind of, I think there are people who maybe they've got the wrong message about what this is, and so they are reading it like these Bitcoin treasury companies are being marketed as Bitcoin themselves. And okay, yeah, sure, I'm sure you can find some, you know, treasury company investor who's maybe saying it wrong and saying, hey, they would rather hold, you know, only treasury companies and not hold Bitcoin at all. I think that's a mistake. Obviously, I think, you know, you should hold Bitcoin, and I think that's the smart and prudent thing to do. But everyone has their own choice to make about whether they want Bitcoin treasury company exposure. And there's different reasons for this too. Because don't forget, there's this concept of trapped capital, right? There are people who want Bitcoin exposure, but they can't buy it themselves because of mandates, because of regulation, because of taxes. Maybe it's a tax advantage treatment. That's one thing. And then the other thing is not everybody wants exactly spot BTC exposure. Some people want less risk and less return, and other people want more risk and more return. And so those people, if they're comfortable with some form of equity or debt exposure instead of just, you know, Bitcoin in my cold card or in my multisig, then so be it, right? Now, the caveats I would give though is Bitcoin is safer, right? Holding Bitcoin in your own custody is, in my view, the safest play. But is there a role for people to use equity or debt? And if they understand that they want a different trade-off of risk and return, then so be it, right? And what I would say, to be clear, I think there are different arguments about exactly how much of a premium to MNAV is sustainable, right? I think some level of premium is justifiable based on the regulatory and tax arbitrage. I think there is some justifiable level of premium. Others would disagree. They would say, no, it should actually trade at a discount to MNAV, and they would have that argument. Or others have the argument of, well, look, people can get wrecked. The equity holders can get wrecked in a bear market. Absolutely. Like I said, it is higher risk, right? Because there is a scenario where maybe there's kind of like a dominoes collapsing and falling, maybe in a Bitcoin bear market. Maybe not now because we're in a bull, but maybe if we went into a bear cycle, could a bunch of these get wrecked? Could there be a big MNAV compression? Could the equity holders get absolutely rinsed there because they took a big equity drop in the value of their equity and Bitcoin is down? So cumulatively, they might be down like massive in terms of like double whammy how far down you are, right? So understand the risk, but there are some people who want that risk because they believe it gives them a higher return. So That's kind of how I would summarize it. I think it is a trend. It's a phenomena that we have to try to understand. And I believe it will help facilitate more people to come in and start getting some Bitcoin exposure, even if it's not the ideal, not your keys, not your coins exposure.
Yeah, I really wonder how much of the fervor right now is from people who are trapped, institutions, entities, individuals, and have nothing to do with Bitcoin. And they see this arbitrage opportunity because it's either they understand that it's powered by Bitcoin, and even though they don't have any, they can get a security. They're in Japan. They have a better tax situation because they could buy non-spot Bitcoin, versus the Bitcoiners who might have either, for some reason, either have money to invest in the stock market, or already do, or have themselves money trapped, or their wives or husbands like securities more than Bitcoin, and it's a nice addition to the portfolio, and are seeing this early, and they're the push behind this fervor. Is it truly, pensions and people in Japan who have no idea what Bitcoin is, but they see Metaplanet and they understand the advantages there just from an A/B test? Or is it people in, all around the world who are like, I can invest in Metaplanet before that arbitrage opportunity that gets bigger or smaller? I'm not sure, but you know what I mean?
Yeah. Well, I mean, it's a mix of things, right? So some of these people are people who came in from the stock first, and then they learned about Bitcoin, and then they, got a cold card and all that. There are other people who came at it from, they were already like a maxi. They already had, their cold card or whatever. They already had their hardware wallet, but they see this as like, this is a risk-on play, right? Like Bitcoin is a savings for them, and Bitcoin treasury companies are the investment for them because they believe it can outperform Bitcoin. And they want to try to sell, they believe that if they kind of invest in these treasury companies, that they can outperform Bitcoin and then maybe later sell some of that back into Bitcoin. Now, on the good side, it's at least not supporting a shitcoin network effect, right? Like, I think Bitcoin treasury companies support the Bitcoin network effect. So I don't see them as shitcoins. I think shitcoin treasury companies are shitcoins, right? Like I think there's like an Ethereum, there are some Ethereum and Solana treasury companies, obviously, have fun, stay poor. I don't think that's going to work, but, people are going to do what they're going to do. And so I guess to answer your question though, I think there are a bunch of hodlers, especially like, as an example, I know in the UK, there are, British people, Bitcoiners who they already have Bitcoin, self-custody, but their retirement accounts are trapped. And so I think it's called SIP accounts. And so some of them are like buying MSTR in those accounts. And some of them have done really well out of that, right? Because, they weren't able to buy Bitcoin or Bitcoin ETFs. So they went for the equities. And so that was a play for them. That was like an arbitrage for them. And in other cases, like you said, maybe it's their family and friends who maybe aren't comfortable self-custody Bitcoin, but they might be okay with equity and debt. So I am, let's say, constructive. I'm supportive. I think this is a trend. It's going to help funnel capital into Bitcoin. Some of these people will then go on their own rabbit hole journeys as they kind of buy the stock and see it go really well. Now they'll start learning about Bitcoin, and they can also learn to self-custody and do all these things that we talk about, like running your node and all these things, right? And so I think, I'm supportive of this trend, but I would just say, obviously, it is more risky than just self-custody Bitcoin, right? I think you just got to be honest and honestly speak about the different risks of these different things, right? There's self-custody Bitcoin versus treasury company equity. And even in the world of treasury company equity, there's like MSTR, which is sort of like the blue chip now, right? Because they're so big and they've got a huge stack and they're very, they're building out their own, let's say, risk curve, let's say, of Stripe, Stride, and Strike, these preferred shares. So, and then so that's at one level, and then you've got like, Metaplanet, and then you've got others who are like really, early in their journey. And so the earlier in the journey, the higher the risk. And if you are okay with that, then so be it.
Do you think that these become sort of a pure play long term, where you'll always have gold miners, right? So it's basically a gold company is an acquisition company. They're mining fiat and trying to turn that into gold to make money. Do you think that these companies become, we get a new Magnificent Seven, a new kind of FANG where, these are the top companies at mining fiat and this is what they do forever? Or do these companies have to morph into something where they acquire enough Bitcoin and they need to figure out either how to financialize the holdings, or, does every company with an operating company that has a positive net cash flow just absorb these companies? And, you already have treasury departments at every fiat company in the world. Would you just have a Bitcoin treasury department at every sort of profitable company, and this sort of thing goes away or gets absorbed?
That's a harder question. I think none of us really knows the answer. That's probably another open question, right? Because, yeah, certainly you and I and probably all the listeners today, we would all say, yeah, everyone should be holding Bitcoin. The question is, should you be engaging in this kind of the debt and the equity and that aspect of it? We don't know. Like, maybe there's only a market for the top few in every jurisdiction, maybe, and there might be like kind of Pac-Man acquisitions of, so they might acquire each other in the bear cycle, right? Because maybe one of them will have a lower MNAV and some other one will be like, hey, let me take out some debt and acquire that, and that would be accretive to my shareholders. So, who knows, right? We might see that. The other trend is kind of what happens to the Bitcoin price over time and what happens to fiat over time. So coming back to what I was saying, now, of course, there's different worldviews out there, but I'm going to say my worldview, what I think. I think this window is open from now until hyperbitcoinization. And as we approach hyperbitcoinization, the window starts to close a bit. And so then, maybe MNAV will compress back. Now, I don't know for sure, right? Because you could argue, look, just like some of these companies today are trading at very big multiples, right? Because not everything is for sale at once. I think that's important because, and I've spoken about this before, like in response to even Knut Svanholm's infinity over 21 million thing, right? Because I've said, look, one of the reasons is if you think about the accounting valuation, it's very well possible that global assets are worth more than 21 million Bitcoin, even, post hyper-Bitcoinization, right? Just based on the accounting, right? Just valuations, and that's just what they're worth. And so could some of these treasury companies still sustain some MNAV greater than 1 based on how they acquire Bitcoin? Yeah, maybe it might be possible. I just don't know. Like, I think that's the open question. And so the way I see now, there's different worldviews, right? There are some who think, no, fiat is going to be around for a while, like, hundreds of years or maybe 100 years more. And therefore, they're just going to keep, these treasury companies are just going to keep on, they're just going to keep accumulating Bitcoin. And every time a fiat currency collapses, they'll just spin up a new one, right? Now, that's not my worldview. My worldview is more like, no, actually, after a while, the world is going to hyper-Bitcoinize. Like, people will eventually, for the most part, now sure, there might be the monetary North Koreas of the world, but for the most part, the world will go to a Bitcoin standard where we earn and spend Bitcoin. And at that point, what happens then? My worldview is the cost of government fiat debt rises such that this arbitrage window closes. And then it just becomes about like, how are you operationally as a business, right? Can you earn Bitcoin? So I think what happens over time is more and more people go to Bitcoin. Less and less people want to just hold pure fiat bonds, right? Because I view that as kind of just bag holding for the government, because these are the ones who are getting debased, right? Now, they may have their own reasons for that, but I think they're all basically getting debased. And over time, there'll be, especially as the generations go and shift, there'll be more people who are just digitally native and just use Bitcoin and don't worry about holding fiat bonds. Why would they hold fiat bonds, right? But it's a slow shift. So it's not happening tomorrow. I see this as like a multi-decade thing. That's kind of how I see it playing out, but none of us really knows.
Yeah. What about proof of reserves with corporations? Do you think they should?
Well, I mean, it's nice. Obviously, it's a good thing if they do that. It's definitely I'm in favor of that. I can understand it's not just kind of slam dunk though. Like, I can understand there are arguments against it because of things like privacy as an aspect of, like, let's say if you're an investor in one of these companies and they go full proof of reserves or show their addresses, does that dox investor coins? right? Like if you contributed coins into that company, right? Are you now doxing your own stack? And it kind of gets awkward. I think likely, yes, I believe that is the trend. I believe that is the way things will go. Like I know Metaplanet and some others have taken that step to show, and Bitwise, as an example, as an ETF provider, not as a treasury company, but they are doing proof of reserves. It's a good trend because that would help stop fractional reserve practices. So I think on net, I think it's likely to happen, but it's more like it's a matter of time.
And I got to ask, what do you think about sort of government adoption of Bitcoin? We hear strategic Bitcoin reserves. Governments are not going to sell their Bitcoin, or they're going to acquire more. Are you, as a libertarian, as Stephan Livera, are you excited to see governments adopt Bitcoin? I know we could argue it's inevitable, but
yeah, I don't know. It's kind of I've honestly gone back and forth myself on this. Like sometimes I sort of think about like Pierre Rochard's sort of argument of like, well, hey, it's eventually they're taking away seigniorage from the state. So that's a good thing, right? And or if you look at like the arguments of like Giacomo Zucca, right? So he might make an argument that it depends on the state, on the kind of state. Like maybe you like the idea of like a small state holding Bitcoin because it allows them to protect themselves against larger states. So I don't know. I think it's a complicated question. Will it help advance Bitcoin adoption? Probably yes, because there's a lot of normies who just kind of look at what a government does and think, okay, well, it's good enough for the government, it's good enough for me. So we'll probably see that. I think from the principled stance, okay, like better to focus on things like taking away capital gains tax or taking away regulation, focusing on stopping AML and sanctions laws and abolishing FATF. Yeah, I mean, if I could wave a magic wand, I wish we could like abolish FATF and go against AML and sanctions regulations. I think that would really enable, people to really use Bitcoin. But yeah, I don't have a strong stance on like, am I in favor of the state doing it or not? I don't really have a.
What if Australia came out and said they were stacking?
Well, I mean, in some ways, yeah, that'd be good because maybe it would mean in the future they could lower the taxes or whatever, or they could, slowly be treated more like a service provider as opposed to our owners or rulers, right? But it's kind of a complicated thing because, people also control the state, right? Through democracy and things like this. Like, obviously I'm against democracy, but that's, this is the world we're in. So it's a complicated thing. I just think we're better off just sort of advancing this idea of like flag theory and sort of treating states like service providers to make them compete with each other, right? Because the more people who do that, it becomes more like a privatized, kind of more like a, private governance, which is more aligned with how, let's say, we as libertarians might see it.
What about sort of, you mentioned before that you still think or see cycles playing out, it sounds like.
Yeah.
So do you see, what do you see for this cycle? Do you see corporate treasury adoption and nation state adoption leading to smaller cycles, meaning smaller drawdowns, maybe less peaks? Or do you see it as just bigger peaks and bigger drawdowns in the future?
I would say the most likely is that we have this kind of decaying peaks. So the peaks aren't as crazy, like the run up. Like basically, I think nowadays I'm looking at the power trend, power curve, power law, whatever you want to call it, and seeing it like diminishing returns from a percent perspective. But in dollar terms, that's still huge, right? Like it's going to be big. So even on the power law trend right now, it's probably like 40% a year and slowly tapering down over time. But some years it might more than double and then, have a bear cycle. And if you kind of average it out over time, like on that trend, I think it's like we're going to be like $1 million around 2033 and $10 million in 2045. So I think that's about the ballpark. So will we see drawdowns that are more muted than before? Yeah, probably, most likely, right? So as an example, if you look at like past drawdowns, there might have been like, I don't know, 85%, 80%, 75%, maybe, who knows, maybe it's going to be 65% next time. I don't know. So I do see these cycles continuing. Sometimes it's because of leverage. Sometimes it's just different things are going on in the economy around the world. And so that could happen. And, maybe the treasury companies, like maybe it's not MSTR that gets in trouble, but maybe some newer one who takes on worse credit terms because they're trying to very aggressively stack sats to kind of, to try to attract attention. And maybe they take really bad credit terms. And then maybe that's what causes them to get wrecked because they got liquidated, or they had to, not liquidated, but they had to sell at a bad time, or, maybe there's like a cascading factor there. I mean, none of us knows, right? But that's kind of like, maybe that's one scenario of how it could go down. But short answer is yes, I believe it's diminishing returns from a percent perspective, but still very high and greater than the level of fiat inflation and greater than what you'll see in other assets. And then also, because that it's kind of the diminishing returns over time, I think that will also entice or enable, in a way, new pools of capital and new people to come into Bitcoin, right? Because now it's not so crazy volatile like it was like it was 10 years ago, as an example.
Yeah. So, I mean, you mentioned sort of, what did you say, 2 million in 2033?
Yeah. So I think the power trend or power law curve, it sort of puts you about there. Now, there can be kind of like the advantageous part of the cycle where maybe we hit it a bit earlier because of the bubble or whatever. So maybe a little earlier, but kind of the trend puts us around there, 2033.
Right. Where does the trend put us, I guess, at the end of 2025? What do you see there?
The power trend, I think last I checked, it's like 125,000 or so. But because this is kind of like the bull year, we'll likely end higher than that, right? Now, none of us knows, right? Like the other factor is maybe we do this kind of stair-stepping pattern, like go up a bit and consolidate, and then up a bit and then consolidate. Like that's the pattern we've been doing so far. So, I mean, who knows, right?
Yeah, I can't tell if we're going to go up to like 500,000 and then down maybe only to 400,000, because you say one of these companies blows up, but if they all don't blow up, one of them will see that as a speculative arbitrage opportunity. I could go borrow maybe or raise equity or debt and buy that failing company cheaper than it would have cost me. So maybe we have small drawdowns and nations and hedge funds and high net worth individuals just keep snipping up each drawdown. Or do we have something where there is actual real FOMO that we haven't seen since, I would say, the end of 2017, where we really spike to, say, 1 million and then draw down to something like 200,000, 300,000, or even 500,000 down to 80K. And in that case, do you see a true bear market of 18 to 24 months like we've kind of seen in the past? Or these companies, again, these nation states just don't have a 2-year bear market in them if they could just raise money very cheaply and keep going at it and competing?
Yeah, I think it might be like, it's too hard to predict, right? Like it could be that maybe the conditions would also be during that bear cycle, it's harder to get capital. It's harder to do those kinds of operations because maybe everyone's spooked or scared. I mean, who knows? Maybe there'll be some big event that scares people. None of us really knows, right? If I was to just kind of say, okay, it's going to be similar to last cycles, but just sort of copy pasted forward. I don't know. Maybe we hit like 200 to 250K, and then we have a bear market down to like, I don't know, 90K or 85K, something like that. But none of us really knows. I think 1 million this year is extremely unlikely. I just don't see that. I don't think so. Like, I think if we're lucky, we'd get to like, I don't know, 300 this year, 350 this year. But maybe next year, if we sort of extend into next year and we kind of keep going, maybe we go a little higher there. But yeah, I guess in the back of my mind, I'm sort of like, okay, probably none of us knows, right? But if I'm guessing 200 to 250K, I think we could sort of hit that towards the end of the year, maybe early next year, and then we do the bear market again, and who knows, right? But really, none of us knows. So you just sort of have to be ready for different scenarios, whether it's kind of the blow off top scenario, end of the year kind of thing, or whether it's more like we just have another consolidation and we rinse and repeat, and we just keep doing this for a few more years. None of us knows. So you really just have to be very prudent and just ready for different scenarios.
So maybe if your friends and family who haven't started stacking yet, and they said, oh, wow, it could go up to 200K and then back down to 85K, in the next bear cycle. Am I too late? Are people too late?
Well, the problem is none of us knows, right? So the problem is, I would say just do more like just regular accumulation, but just kind of don't, like, especially if we sort of get really high. Like if we got to 180, 190K later this year, at that point I would be really because honestly, how would you feel telling your family, just lump sum it all in at 190, or whatever, and then if we hit 200 and then crash down to 80, how are you going to feel?
Yeah.
You know? So, and look, I guess I would put it to them this way. Like, say, look, none of us knows, but if you put money in, think of it like it's got to be in there for at least 5 or 6 years. And if you're comfortable holding for 5 or 6 years, then, okay, do it. But if you want to sort of optimize the timing a little, then, okay, if we kind of ran up crazy this year, then, maybe that's where you are sort of slowly scaling in, just in case we sort of have the next bear market and, you don't want to get wrecked. Because the paradoxical thing, the common thing, as I'm sure you've seen in past cycles, is the time your family and friends are asking is usually the worst time. Like, that's normally that is the 20K in December 2017, or that is the 65K in 2021 when they're asking you. That's just kind of, it's kind of like if they're asking you, that's often a bad time.
I hear you.
But you don't want to discourage them, but you also don't want them to get wrecked. So you sort of have to find a balance for them and say, look, just, slowly accumulate an amount that you're comfortable and just sort of wait and see how things go. Because, I think none of us really knows, but maybe that helps them more from a psychological perspective to not sort of get wrecked, buying the absolute top and then having a really bad time in the bear cycle.
Yeah, maybe phrase it as it's not get rich money, get rich quick scheme. It's don't get poor fast scheme.
Right, don't get poor slowly scheme, or, because everyone's getting fiat inflated, right? Like, fiat inflation is probably 10-12% a year, right? That's how much people are actually getting wrecked if they don't buy Bitcoin. So, it's important for people to understand the problem and then, start taking the right action to, start saving into Bitcoin. But of course, be wary if you're likely buying into the top. That's all.
I don't want to be a doomer, but I do see the increase in inflation, I think, really start to affect people, even if it's below the surface. Just saying things like, wow, like 2025 is just, everything is so stressful. I'm glad I got an hour at the beach or something. Like, wow, like very like I got an hour of recess from the rulers. It's just I think it's really hurting people. And it, I think Bitcoin is the solution there. It's not necessarily an inflation hedge, but it can't be debased. And you can't, I think that's really powerful in today's economic environment. One thing I've been seeing float around the internet that I wanted you to address is, does Tether do stable coins? Do the stablecoin entities get to print stable coins and pump the price of Bitcoin?
This is the what year is it meme? The 2017 or 2018 narrative called. Now, it's different nowadays, right? Like, I think nowadays there are genuinely so many large buyers pushing the price of Bitcoin up, right? There are nation states, there are treasury companies, there are ETFs, there are, just everyday people, ranging from everyday people to small businesses, to family offices, to large private companies, all of them buying right now. So I think this notion that, it's just Tether pumping the price, no, I don't think so. I think they are latching on to old narratives from years gone past of typical Tether FUD and Tether truthers narratives. And usually what they're latching onto is they'll look at some announcement like Paolo or someone from Tether will tweet, we just issued some new Tether. But that's because you can see what's happening on that chain that issued the Tether, let's say. But you can't see what happened on the fiat rails, right? That somebody wired in some fiat money because they wanted Tether to create some new Tether. So I think that's really the main thing. And if you talk to people who work in these OTC desks and things like that, you'll see, there are people using Tether. Like, it's a big thing. Tether's a huge thing. So I think Bitcoin is not just an IQ test. It is kind of an ego test. It is kind of a, you get Bitcoin at the price you deserve. And for some people, that trap is like this ego trap of like, I want you to be, I want you, the Bitcoin holder, to be wrong for this reason that I understand and you don't. And this is like one of the ones they can latch onto. And it doesn't really require a lot of proof from them. It's kind of vague and murky, and they can just kind of throw this out there and feel in their own mind that they're intelligent or better than you or more moral than you, because they might see it like, hey, you made all this money buying and hodling Bitcoin, and but you did it wrong, or something is wrong about you for doing that. It's like their way of sort of expressing sour grapes.
Fair enough. So I want to ask you, I mean, how long have you been doing the Bitcoin podcast, the Stephan Livera Podcast?
July 2018 I started. So we're now 7 years.
About how many episodes? Over like 600?
Yeah, let me just check. 675.
What keeps you going?
I think it's just that I believe Bitcoin is the answer. You know, Bitcoin fixes this, right? Like, it's just Bitcoin fixes this. So it's important that, you know, I keep doing it. And look, I'm supportive. I want more people to do Bitcoin podcasts. It's great. It's a good thing. More people should do it because other people can resonate in ways that I can't. And so, you know, more people should do it. More people should be talking about Bitcoin, trying to help increase adoption and get them to obviously do it, you know, ideally get them to do it the right way. But, you know, even if they start custodial or with some derivative exposure to Bitcoin, that's better than nothing. So I'll take it, you know, let's just grow the adoption however we can. And nowadays, part of my, I guess I see it as my quote unquote job per se, is to just try and help keep people updated about various things happening in Bitcoin, whether that's, you know, Lightning or layer 2 stuff, or whether it's whatever, economics things and, you know, regulatory things or privacy techniques or, you know, treasury companies or whatever, anything related to Bitcoin.
So what have been maybe the highlights for you over the past, say, year or so? Or any aha moments?
Yeah, I think for me, the power law stuff is interesting. Like, that's probably something that's kind of, you know, shifted my thinking a bit more. And I think it's made me sort of understand more that, look, this is an adoption story, right? Yes, there's like the Fed this and the ECB that and this news and this war, that war. But I think it's just an adoption story, right? And it's just, yes, there are times we kind of periodically go kind of into a bubble or into a kind of a hype phase, but then we kind of crash down and then eventually we kind of come back to like this power law trend line. And it's kind of eerie how we've been following that trend line for a while. Now, yes, I think right now we're above that trend line, but that's kind of, we're in the favorable part of the cycle, right? Like this next, who knows, 6 months is probably the really good part of the cycle that, you know, it's fun to be holding Bitcoin. And then, you know, once you go into the bear cycle, then you feel like everyone's telling you you're an idiot because, you know, you're wrong and Bitcoin's a bubble and it's all over and your reputation is gone. You know, all the normal, it's kind of, it's cyclical. You'll go through it. We all go through it. So that's been one thing. Yeah, otherwise just kind of watching self-custody adoption and like what are some of the technologies and techniques. Are people going to use things like Miniscript? Are people going to use, you know, different L2s, Arc and Spark and things like that? What will that enable? Will it be a matter of just getting better UX, right? Like that's been, I guess one question in my mind is a lot of people are onboarding right now through like ETFs and treasury companies per se, like derivative exposure or custodial exposure, granted. Is it that they're not using self-custody adoption because the UX isn't there yet? You know, and maybe once it gets better, maybe then they will. What is going to happen with, you know, so-called medium of exchange adoption and like method of payment per se? Is it that store of value is just simply growing faster than the method of payment side of things? Now, of course, I'm bullish on all of it, right? Like I'm bullish on BTC Pay Server. I'm bullish on people using different layers and different aspects of it, and I'm bullish on the treasury companies. Of course, not all of them. Some of them, like I think some of them will really perform well. Not all of them. Some of them may get wrecked. So be it. And yeah, just bullish on Bitcoin as always.
Has the podcast changed you at all? People say, you know, has Bitcoin changed you? Has the podcast changed you?
Maybe a little bit in my conversational style. Maybe the way I kind of ask questions, because it's become even more part of my job or part of the way I act and talk. I think one other thing in Bitcoin is just sort of learning to deal with a lot of disagreements, right? Because there's a lot of disagreements, right? I was commenting on this earlier that it's funny, like during the bear market, people were sort of saying, oh, look, people are just arguing because it's the bear market. You know, people are bored or angry. That's why they're arguing. I was coming back at that saying, no, actually, people are arguing regardless of whether it's bear, sideways market, or bull market. People will find lots of things to argue about. And so that, in a way, is an opportunity to be good at learning how to disagree with people. like in a civil way and say, well, okay, this is that argument, but what about this? Or what about that concept? And, is that where we agree and that's where we disagree? And so I think that's maybe something that is coming over time just because of all the time I'm spending doing podcasting and moderating panels and moderating debates and things like this, which, yeah, I guess you could say that has changed me in a way. I don't know. Yeah, I guess other aspects of it are kind of thinking, from a business perspective, like how do you think about running a business, operating a business? So I guess those are a few ideas.
Could you imagine going back to your accounting job before the podcast?
No, at this point, no. It's just, the funny thing now, though, is like what we're starting to see is more like a lot of people who are trying to bring their fiat world expertise and do it in a Bitcoin company or in some kind of Bitcoin way. So, yeah, we're starting to see that more. But I guess for me now, just because I've been doing this podcast for so long, now my role is kind of very aligned with that. And a lot of my time is spent, interviewing, moderating, and here and there speaking and writing about Bitcoin. So I guess that's kind of where I spend my time and effort mostly. And so, where you spend your time, that's where your energy, your energy and your time goes. That's what you get good at, or that's what you hone as a skill.
Sure. I agree with you earlier that, I think more people should get into podcasting about Bitcoin or any form of content creation about Bitcoin, because it is about people are looking for different ways to relate and different things resonate, and they're always looking for different voices. Is there maybe, my final question to you, is there maybe an aspect of yourself that you're willing to share that doesn't come across on the Bitcoin podcast, like on the Stephan Livera podcast, that maybe people just don't get to see because the bandwidth can never capture a whole person? Is it like, what do you like to do outside of talk about Bitcoin? Maybe is you like to cook? Is it being, what has been sort of the thing that also drives you?
In terms of like fun stuff, I procrastinate. I'll play some chess. Just like online chess. I'm not good at it, but I do enjoy playing a bit. That's one of my procrastinations. I also have two young children, right? So I've got a 2-year-old and a 7-month-old. So that takes, that is also, a lot of time and effort. So I guess I'm in that, that's just the phase of life I'm in, right? So that's part of it. Probably something a lot of people don't know is that I used to do a lot of singing and stuff like that. So I occasionally pull that out when, when we're at a conference, and sometimes we go to a karaoke or I sing something, but that's probably something people might not know. Yeah, those are kind of the main things. But yeah, otherwise.
All right, that's awesome. I wonder how maybe being a Bitcoiner has affected your parenting, and what is your favorite genre of music to sing?
Yeah, the parenting side of it's interesting. Like, I think trying to find the right balance of like, having children, do what they want, have some level of self-guidance or direction about what they're doing, but also, for myself as the father to guide them and help coach them in things like, okay, this is the right way to act, or these are the, you have to have your manners, these kinds of things, or like what they're allowed to do, what they're not allowed to do, this kind of thing. Yeah, in terms of singing, just, pop songs. I grew up singing a lot of like Michael Bublé sort of stuff. But nowadays just kind of pop songs and whatever is, was kind of popular, when I was growing up, I guess.
I can't wait to see it the next Satoshi Nakamoto by Mike Yarmaz and Lightning Labs. That'd be a lot of fun. This has been so cool to chat with you, Stephan. I appreciate your work immensely. I always enjoy your show. You're minute for minute probably the best show in Bitcoin in terms of like the technical aspects for sure, and kind of understanding the deeper rabbit holes on those fronts. So thank you so much for all your contributions. I'll leave it to you for any parting words and let people know they can find you and your work.
Yeah, thank you. Well, thanks again for hosting me. And yeah, like I said, I would say just, you've got to accumulate Bitcoin, but you've got to also be ready for different scenarios that can happen. And so, it's a matter of finding that right balance point of like how much risk you're going to take versus how much you are, being prudent. And yeah, people can find me online, Stephan Livera Podcast, or search stephanlivera.com, or just search Stephan Livera. I'm sure listeners will find me online from that. And yeah, thanks for having me.
Awesome. This has been so dope. Thank you so much, Stephan.
Thanks for tuning in to this episode of the Bitcoin Matrix. If you enjoyed the conversation, don't forget to like, subscribe, and drop a comment below with any questions or thoughts you may have. We'd love to hear from you. You can support the show by checking out our sponsors and affiliate links in the description. It helps keep bringing you great content while connecting you with awesome products that I believe in. Share this episodes with your friends, family, or anyone curious about Bitcoin. And let's keep growing this community together. Stay curious, keep stacking, and I'll catch you in the next one.